And she took another winner. The beautiful thing. Good afternoon or late good morning. Good morning, YouTubers. This is Bagadon, Stock Market Caddy. We'll give everybody a chance, those that want to stop in. We appreciate the like buttons and the retweets, and it's how we create a little awareness of who we are and what we're about. You're watching Swing Machine, and you're watching the performance of a concept from one of our members being run live. Good morning. Good morning, YouTubers. This is Bagadon at Stock Market Caddy, and today is Thursday, May 4th at just about 11. Now, we plan on running live until noon on YouTube. So we're giving you an opportunity to see what we're up to. I don't know the outcome. I never know the outcome. But so that's why I say at noon, it's our expectation that we'll need to turn down. But we do this to showcase what we're about, what we're trying to do. And we're having a very interesting morning here. We have a member that approached me a few days ago. It took us some time to get our arms around it. And he had a fairly conventional trading strategy that he wanted us to try to write and to do some back testing on. And I say conventional because it used some conventional tools, and we did it, and the results were terrible. They were terrible, and but what we were able to do, they were so bad that we just reversed the concept. We just put it in reverse, and and the results went the other way. Crazy, right? So here is a conventional concept, and it could be why people are losing a ton of money out there sometimes. They hear something, it sounds really good, it is whatever, and they do it, and they do it, and they do it, and they lose, and they lose, and they lose, and and that's that. So what we do is, before we do that, we write it into a code. And then we back test it and we take a look at it. And if it looks like crap, it looks like crap. But then before we throw it away, say, well, maybe And in this instance, it was so bad, we just, like I say, just totally reversed it. And it looked pretty interesting. And so we chose to run it today. Now we turned this on at approximately 10 a.m. So we're about an hour in. And you can see we're up in the house with trading one contract, $2,220.20, and it's up another 200. Now, this is one morning, one market, one strategy, running on one specific style of chart too, right? Running it on a 3-line break chart, 1,000 tick. It does have a stop loss, a negative outlier stop loss just there to, not to affect the strategy, but just to keep anything from disastrous happening. That's all that's there for. So we don't get, overly excited, but it's very pleasing. And we'll have to collect data on this. And we'll run it. We'll run it in full view. We're certainly going to do it the rest of today, and we'll probably do it again tomorrow. And then ultimately, if it continues to show promise, we'll get a little beta copy out to that specific member for sure, and then our other members that are interested. So this is the sort of a thing that, and you might see on YouTube, it's 11 o'clock. You might see it reverse. I mean, it might turn around and lose $1,000 here in the next hour, but so we try not to make our decisions purely on the money, but really on the performance and on the volatility on our account. Right now, the volatility on our account has been just a beautiful, beautiful thing. Absolutely beautiful. If you have any questions on YouTube as to who we are, what we're about, feel free. If you're looking for a holy grail, you're probably going to be disappointed, because I hate to be the bearer of bad news here. There is not a holy grail that is going to win on every single trade, every single market, every single day, every single whatever. It doesn't exist. It doesn't. The holy grail is you. It is you. If you can accept the uncertainty of it all. Some people can, some people can't, every day is a new day. It's always uncertain. And if you can embrace that and welcome that and be flexible, at the same time being disciplined and patient, all these important attributes that help you in so many other things in one's life. And in doing this, you're going to need them all. And we try to help around the edges, but this is a really cool outcome. So you're invited to watch. If you have any questions, put them in the chat, and we're going to be doing other things. But by the way, if you check our tweet stream, we said the other day, I think it was like 2-3 days ago, we made it public. We showed you the S&P. I don't want to change the view here, but the S&P was in euphoria. The SPY was in euphoria. And where was the VIX? It was in panic on a daily basis. And if you go to the YouTube, you'll see the video. And we said, well, what are we going to do here? Are we going to buy with everybody else? No, nope. Nope, we're going to go and get some puts at the SPY at 416. 416 for the middle part of June. Each contract cost us about $700, no more than. That was our maximum risk. We got a few. And those puts are up this morning in 2 or 3 days over 100%. Get out. We said when the market was in euphoria on a daily basis and the VIX was in panic, that there was a 95% statistical likelihood that we would come back toward the mean. That's all we were playing for, was the mean, and we're getting a little bit more. We got a little lucky too. but we didn't wing it. We used swing machine. So you can use swing machine intraday. You can use it daily. You can use it on futures. You can use it on stocks and therefore options. We haven't done that much with Forex. We hope to in the very near future, but I don't see a reason why one couldn't. And we just come in and do what we do. Now, of course, we really enjoy running programs so that we can just really just relax and let the machine do its thing and trade the liquidity of a particular market. So that's what's going on right here. Isn't that a beautiful thing? Now, this comes from a member, but it's the opposite of what he thought. And quite frankly, I thought his idea was interesting. I thought that it would be, you know, I thought it would be okay. And then when we wrote it and looked at it, I went, oh, wow, that's a surprise. No, it isn't. Not so good. So I'd rather know that before I spend a whole lot of time in money trying to trade, something. But, this is where we get better, his concepts. So we say, well, let's turn it around. Let's turn it around and see what we see. So that's what's going on. Now, gold, by the way, everyone's gold, right? Gold. We just got through saying, let me just show you. Now, I'm not suggesting anybody do this, but gold is where? Gold is in euphoria at 2060. At 2060. Do I want to buy gold up here at 2060? No. Could it go higher? It could. But I think the likelihood over the next 20 to 30 days is that gold is going to come back toward 2014. The likelihood is about 95%, not a sure guarantee. So as we get up here, if we get back up to, it was just at 2070, I think we get up to 2065, 2070, I think the play for us, I'm not saying for you or for anyone else, would be to come into the option market and to get a put, at least a put, maybe a put debit spread on gold. Not that I'm bearish gold, I just think that it's a little overdone. As is, I think, oil too. Let's just take a look at oil. Now, oil, well, I can't get it on a daily from here, but I don't want to upset our screen. If you have any questions, let us know. We're going to let it run. Thanks for stopping by. She's getting a little bit of a dry down here. And again, we don't know what the next hour holds. Hopefully she doesn't erode all of that. I hope not. But we're going to let it play out. And I just remind the folks that are passing through on YouTube, may be difficult for you to appreciate this now, but where there are no holy grails and no sure things, one has to learn, and it truly is practice and learning to get an appreciation for one's account volatility. And because programs can run very successfully for an hour or two and then not so successfully, right? And it's a question of how volatile the account is. Can we spend more time above water than below, number one, and then, and stay relatively stable? We did have to take an outlier stop loss on that last trade, and that cut us back. But so we know this, and our members know this, but as you're passing through on YouTube, you may not be able to fully appreciate it. If you have an expectation that you have some sort of strategy that is going to win on every single trade and just automatically print you money, and you never have to do anything or never, have to make any adjustments and don't need to have any trading skill, then, you would be disappointed, because you do need to have piloting skills to fly the plane and to run it on autopilot. But now gold has come in quite a bit, and gold has a tendency to want to sell off on Fridays for some reason. So we're commenting about that to our members this morning when gold was north of 2060, that a put debit spread on GLD here for the next 10, 15 couple weeks might be a neat way to go. The put option contracts we put out a little note on just the other day. It was just 3 days ago. I think if you look on YouTube, we explained where we got it, why we got it, how we played it. They're up over 100%. Again, good afternoon, everyone. You're watching Stock Market Caddy, and we're not suggesting anybody take any of these trades, but we're just showing you what we're about. We had a member ask us, we were describing this earlier, asking us to do something specific in terms of a strategy that was fairly, bear with me a moment. And it was fairly, it was using some traditional tools. And I thought it sounded interesting. And so we set out to write a program to look at it. And lo and behold, it didn't look good in terms of the back test. And I was surprised a little. I thought it would be okay. But it wasn't. And so as an example, sometimes you may have something and we think it's going to do, maybe, and it could change. This is the thing about the markets, that, everything is so uncertain. They're always in flux. So you've really got to embrace, as a trader, you have to be able to embrace uncertainty and the flexibility of the market. Things change constantly. So in any case, though, over the testing period, it didn't look good. In fact, it looked so bad. I was rather shocked. And I said, geez, maybe I should just turn the thing around, which sometimes we can do. So we actually turned the logic of the program completely around. And the testing looked pretty good. It looked pretty good. And we're like, oh, what do you know? So that's in the testing world. And so we decided this morning, we had the time, and we told the members that were here what we're going to do. And so we made the note. We started at 10 o'clock and we started running the program. And it has a negative outlier stop of $1,000. And it did take one of those. We were up as much as 2,200 in less than an hour. Now, for the benefit of those coming through on YouTube, please understand, any program, any trader, anything can hit and make money on any given trading session, trading hour, trading day, trading week. Anything can do that. The question is whether or not it can do it over and over and over again. Maybe not every single session, maybe not every single day, but more often than not, to make money. That would be the case with an individual trader, with an individual indicator, with an individual strategy, with an individual. It just is, right? So I don't want to overstate, but it's always pleasant to see. Now we opened up YouTube at 11. And that was our plan. And we were going to run YouTube until noon. I don't know what it's going to do between now and then. It might give it all back up. What'll be unfortunate, though, and you just can't, because it wouldn't be fair to our members. You won't see what it'll do later today or tomorrow or on Monday or on Tuesday. But we give you a glimpse of how we go about approaching our business. And this is a business of trading. Each individual member is in the business of taking a portion of their capital and trading it. And what are they trying to do? They are trying to extract cash flow. And we try to help, and they help us. And this is a classic instance where, quite frankly, I don't think I would have ever thought to do what the person suggested. I just don't think I would have done it. I certainly would not have thought to reverse it. If I didn't think of the thing in the first place, I wouldn't have thought to reverse it. So it'll be really interesting. And our members are also, by the way, are listening on Zoom, and they're watching like, well. And in fact, one of our members has been with us a long time, good long time. And he said, and this thing started in the beginning. It's like, damn, Don, it looks very, very, what we call scalpable. Like, it's getting in the money quite a bit. Could we, it looks very scalpable. So But this is an example of a couple of things, not just the strategy, but what's possible and how the membership, I believe, I hope others feel the same way, to Stock Market Caddy is just really cool um, and hopefully advantageous to all of us. So we'll see. Now, the only reason I put a stop loss, the stop loss, I wasn't, and it's funny because when I look at the strategy, it's running, and now this strategy too, by the way, I chose to run it on a 3-line break because that's what I had been running, and I got it at 1,000 tick. What might it do on something else? I don't know. I don't know. We don't know. And it'll, like everything, it'll take days and weeks and in probably most likely multiple members to to test and to track and to do what they do. And maybe it morphs into something else. The stop loss, when I looked at the strategy on the chart, it really didn't look that good. It looked a little like, I don't know. But when I looked at the back test, I'm like, well, but that took that away. The back test showed me the performance, and I think the back test was pretty solid. But I also wanted to put in a stop loss because I didn't want to run the risk of a negative outlier. I don't want to put the stop loss so close that I'm trying to use the stop loss as a major part of a strategy. When you're doing that, when you put a stop loss and you're trying to, make it a big part of the strategy, it can sometimes be counterproductive. So I wanted to put a stop loss in that just prevented something really, really bad from happening. And a point was, I thought would be in, and actually we use what we call the maximum adverse excursion to try to find that place. So that's where it hit. So, and we did have to take one. Now, what would it have done if we hadn't, we'll have to go back and look. But I describe all of that just to give you an idea. And if anyone is passing through on YouTube, we say this all the time, and I'll say it again. We're not suggesting that we have a holy grail. And so please don't send me, and it happens every time. Hey, bagger, how much is that bot? I want to buy one of them bots. I'll get one today. I think somebody's tickling me on that. If that's your takeaway, that's not good, right? I'm not, and I'll put it on me. I must not be communicating. There isn't. The Holy Grail is you. The Holy Grail is you. And you have to have real expectations, and you have to have all these other intangibles, and one of which is just learning to embrace uncertainty. Years ago, somebody told me, back long before this, they said how the market hated uncertainty. And I took it as like, oh, okay, well, this guy, and he told me, he used to go get coffee for somebody at a trader up in Chicago. And he said, the market hates uncertainty. I'm, well, okay, the market hates uncertainty. Nothing could be further from the truth. The general market may hate it, but traders love the uncertainty. They thrive on it. It keeps life interesting. It really does. It really does. And if you can embrace that, welcome that, and like, oh, okay, we're having a nice day today. And, do I know what tomorrow's going to bring? Do I know what the next 30? No, I don't. I don't. So, and by the way, for those that are passing through, we made a video showing how you can use Swing Machine on a daily basis and how you can use it for stocks and options. And, we don't do this every single day. One, the S&P doesn't provide you that kind of opportunity every single day. But if you go and look at the video, we did suggest 3 days ago, and we did put on put contracts. Now we could have made them put debit spreads. We chose just to get the puts on. We'll probably sell further down here shortly, but those contracts are up in less than about 3-4 days. I think it's not even 3 days, over 100%. Nice trade. But we show you in the video where they came from. And so our option trading is very mechanical. It's, if this is doing that, that's, if swing machine's showing us this, this, and this, then we do this, this, and this. And we even have radars that, are working right here, right now on individual stock trades. One of the trades that we're beginning to scope out is gold on a daily basis up here at 2060. Now we'll go into the gold market, the GLD. But what are we thinking about doing? About fading this move, maybe as early as tomorrow. But now, don't necessarily, please don't, I'm not bearish gold, I'm not bullish gold. We're traders, we don't get caught up in that. But gold on a daily basis is pushing into euphoria. And what we do know is that once we get up in here, the likelihood that we're going to pull back is about 95% over the next 20 to 30 days. Therefore, I would want to fade that. I won't use a futures contract here, but I'll go into the option market, the GLD, find out what it's trading at right here, right now, which is probably, should be like about 206, somewhere around there, 205, I think, should be. But, and we will put on a put option. Haven't done it yet. So we may do it, later today or maybe tomorrow. And we'll go out about 30, 35 days and look to manage that thing inside of 20 and 21 days. And that is a mechanical trade. This trading futures intraday like this, these trades are robotic, and I haven't scalped any of this, right? So this is, this is just doing its thing. I haven't scalped it. I could, but I haven't. So if you have any questions, feel free to let us go. You can let us go too, I guess. Let us know. You can let us go. There is a technique though. There is getting acclimated and accustomed to this. It isn't, we try to make it look easy. I think it is easy, but there is a learning curve. There is a comfort level. And once you settle in and find that comfort, you'll be in a beautiful place. We hope, right? I can't promise anyone an outcome. I wish I could. I can't promise an outcome. I can't, we're not saying that if you subscribe, you're automatically going to make a ton of money. We can't, and we don't. But I do think that you will learn a lot, you'll have fun, and you'll probably never look at the markets the same way again. That I think is probably safe to say. Any questions, let us know. We got about 10 minutes left for YouTube. And unfortunately, at the time you saw here, we cut our profit off the high water mark, but it is what it is. I can never know. What is interesting on Swing Machine, though, I should have pointed out, the 5-minute VIX went along at what time? 4:05 a.m. 4:05. Do you know what's happening at 4 a.m. in the morning, every morning? The war room in the Treasury, those little bastards in DC, they're getting in there. That's when they go to work. They're probably already, they've been in there. Someone turned on the coffee maker. They got their donuts. They sat their big fat ass down in there. They started making phone calls to Citadel and said, "Hey, boys, I think today's the day." At 4:05. At 4:10, the S&P goes south. Are you shitting me? No, I'm not. You're up $1,700. Now, the NQ has already cycled in and out, but earlier today, which was up a couple of grand, the NQ also went short at 410. It has cycled in and out. Now, the Dow went short at 425. You'd be up 2 grand, and the Russell at 940. The Russell is getting hit because the Russell comprises, or a lot comprises a lot of the regional banks. And the regional banks are getting smoked, as you know, because interest rates, short-term interest rates have gone up 5 or 6%. And if you haven't figured it out yet, you could get a whole lot more return if you put your money into mutual or money market funds, invested in treasuries, short-term treasuries. You're going to get a higher yield than parking it at a bank. I'm not saying anybody should go do that. I'm not, but apparently people are. It's pretty safe. People will take care of their bread first before they do anything else, before they diet, before they stop drinking, before they get off a burning airplane. They want their stuff. They want to take care of their stuff. They'll go get their, you ever seen the planes where they, get in an accident coming in, maybe not a complete, crash. The plane's burning, the wings are broken, God forbid, the sirens are coming, and they get in their suitcases. They get in their stuff. I'm getting my ass off the plane just as fast as I can and getting the hell away from it. And you see other people, they're getting their luggage, they're carrying their luggage off. Amazing. They do the same thing in the market. And they don't have the skill set. They don't have the patience. They don't have the discipline. They don't have the interest either, or the passion to do what we're doing, which is okay. But that leaves them only two other ways of making decisions, neither of which are good: greed and fear. And that's how they make their decision. They will call up their telebroker on the phone and get their account value. And if the account value is down a whole bunch of money, then they'll start pushing sell buttons. Isn't that terrible? When they start hearing and seeing about gold on the news or on CNBC, that gold is up, gold is up, gold is up, they can't stand it anymore. And they will go buy gold. On an hourly basis, let's see if we can change this here to an hour on gold. Gold went long 49 hours ago for us at 10 a.m. on the 2nd. Are you kidding me, Bagger? Are you freaking kidding me? No, I'm not. You put on one contract, on a futures contract, you're up $6,000. Get out. No, I'm not. If you had bought call contracts on the GLD, you're up probably that and then some. What about the daily? I don't want to trade intraday. Okay. How about the daily? 38 days ago, a little over a month ago, on March 13th, you could have bought a futures contract in gold at 1933. You'd be up $12,750. Are you kidding me? No, I'm not. If you bought 3 of them, you're up 30, 40 grand. The issue is, would you still be in them? Probably not if you don't have any trading skill. Why? Because you as well, and I know this from my own experience, will make a decision based on the money. The money. When this thing got up $2,000, oh, honey, if we take it off now, we have $2,000, we'll go on a cruise. Okay, let's take it. Yay, So you got to learn to not make decisions on the money. And that's hard because Wall Street and Madison Avenue have indoctrinated everybody, since we were, little kids, to make decisions on money. On a weekly basis, we could even do it on a weekly. Get out. 19 weeks ago, just 20 weeks ago, 3 or 4 months ago, on December 30th, if you had bought one gold futures contract, 1857, you're up 20 grand. And I have a family member that did just that. We have other members as well. We'll put this back to 5. Now we like to trade intraday. And the reason for that is we like the flexibility. We like the flexibility, and we like to go into these markets and extract what cash flow. But we can't control the market. The market is going to do what the market's going to do, but we can control as humans what we're going to do. We can control what we're going to trade, when we're going to trade, how we're going to trade, how much leverage are we going to use. And we're not going to beat ourselves up if we don't get it all. We're just playing for the middle, playing for a portion of it. But that needs to be learned and acquired and disciplined and honed. If you start making decisions on a strategy, which we showcase this for our members virtually almost every day, yes, the strategy is having a drawdown. If I start getting in there and manipulating and reacting to the money, constantly the value, then I'll never get to a place where, I can be, trading robotically. Always be reacting to the money, and that's greed and fear, and that just won't work. It just won't. You'll be a wet noodle. It will it'll eat you up, drive you to drink. If you have any questions, let us know. We got 5 minutes left on YouTube. I'm sorry for the last hour. You didn't see something more pronounced, but it is what it is. And our members, they can patch in through Zoom anytime they want. Whenever our computers are up, we have a Zoom link. And but they're busy doing their own trading. They're trading other markets, nat gas, coffee, stocks, options. They're trading the interval. They're playing their own game. We're not handing out the fish, but we're available to them if there's something specific that they need from us, or have a specific question on something. Not a question to buy or sell. We're not brokers. We're not financial advisors. We're not doing that. We're not set up to do that. We don't. But we try to mentor and try to support the tools that we provide. And some of these tools will come in and out of favor as the market changes. Central to what we do is Swing Machine, though. We have over 60 proprietary tools, and Swing Machine is our flagship, and we keep it pretty central to our trading day in and day out. You can literally trade without a chart if you find yourself getting a case of vertigo. But you might want to put on paper anyways, this gold mark at a 2060. Let me see what the GLD. So if we're going to trade options, we would have to go to the GLD, and let me just see what it is trading at. I don't have it up right here. GLD. Yeah. No, she's not quite at 200. She's supposed to be 1/10. I don't know why she's not at like at 205, but she did get herself up to 191. I think ultimately she wants to get to 200. So it might be, I don't think there's any rush to go fading it now, but I do think I think Friday could be a down day for gold, for aggressive traders. Now, the unfortunate part too, as I can see on the strategy, I took with the machine, I set that stop loss at 1,000 and she hit it right on the screws, right at 1,000. Had I not set that stop loss at 1,000, I can tell by looking at the strategy and on the screen, she would have come back. And not only that, she probably would have made, I can tell you, she would be up. It's kind of a heartbreak, but so it's always a trade-off. Yep, she would be up 1,600. So this is the dilemma, the trader's dilemma. And it is a dilemma of sorts, and we can only do what we can do around it. And the dilemma is this. You have a strategy, an approach. And by the way, she just took that profit and now, we're in gear going the other way. And actually, she took it on the screen. It would have been a profit. So that's by me loading in that stop loss. And I did that after the fact. I didn't have the stop loss set at 10. I put it in afterwards because I get in, I started thinking about it. And by putting that in, that cost me $1,000, not only $1,000 on the stop loss, but it cost me a $1,600, $1,500 winner. So we would have been up probably over $3,000. Now, the dilemma is, if I hadn't put the stop loss in though at 1,000, maybe that, she would have kept running. She could have kept running. So it is a trade-off when you get into, wanting to manage risk. And so we don't beat ourselves up over the high watermarks. Oh, it was up 2,200. Now I'm only up 780. Oh, it was up 2,200. If I hadn't done this, I would be up 3,500. Oh, I would. That's not what we want to be doing. What we want to be doing is, I have been trading this program since 10 a.m. Yes, it had a high watermark of 2,200. Yes, I put a stop loss on it, but I'm still profitable. I am still profitable, and it's been fairly comfortable. I mean, I haven't been underwater. I haven't been under any stress. And if I can trade for a couple of hours and have a run up of 2,200, and if I stop, if the only decision I make right now is to turn the strategy off, and I turn it off right here, right now, I'd make $1,000. Oh, that would be fine. Then the question is, can I do it tomorrow? Can I do it Monday through Friday of next week, and the week after that, and the week after that, and the week after that, and the week after that? Well, you won't know. Our members will know. And they very well might be doing it. And there are 20 trading days in a month, right? So we start breaking down the pieces. If there are 20 trading days in a month, and I take Fridays off, the 24, $100 a day, $100 a day is, $2,000 a month. And then you sprinkle in a couple of option trades. Now, we don't hit on every single option trade, but I got to tell you, when we put on option trade and we double our money in 3 days, that covers up a lot of sins, right? Covers it up. Makes sense? I hope so. But learning to get your emotions under control and out of your golf game, getting them out of the way is not necessarily easy. I get it. I know that. So on YouTube, it is now high noon, and we're going to part ways. And thank you. Be sure to visit the website. You're welcome to give us a call, and we wish you the best. I hope you found it fun.